Hello students, myself Dr. V Ramakrishna Rao. Today I would like to discuss a topic on final accounts. Final accounts. What do you mean by final accounts? Final accounts is nothing but it is one of the a part of accounting cycle. It is one of the part of accounting cycle. So in the accounting cycle, this is the last part. That is nothing but a final accounts. So that final accounts consists of three parts. One is the trading account. Second one is the profit and loss account. Third one is the balance sheet. Third one is the balance sheet. Here, why these three are very crucial for preparation of any business organization? Because the final accounts, here we can mention that final accounts. Final is nothing but at the end of the accounting year. Generally, the each and every business organization, the accounting year is nothing but generally the first 31st March or there may be a 31st December. So most of the cases are they should maintain the accounting period is nothing but or end of the 31st March they should close their books of accounts. That particular accounting period they should know how much profits they are earned or how much losses they are getting. So that where we may be calculated by using these final accounts. The first part is trading account. So here, what do you mean by trading account? Here the trading account is nothing but the each and every business organization they should know how much profits are earned or losses are getting. So with the help of this trading account only, all the factory or production expenses that where we are recorded at one place, that is the place is generally called as a trading account. Means, say for example, the trading accounts may consist of, it is a T-shaped part. The left hand side generally consists of starts with an opening stock, then it may be go for an purchases, then it may be go for wages or any other adjustments, and credit side is the sales and as well as the closing stock. Here we can record these type of transactions especially for a trading account. With the help of this trading account, we may finally conclude that or we may identify that either it is in a gross profit or it may be any other getting a gross loss. How we are getting a gross profit or gross loss? Simply, the expenses means we are comparing both the incomes and as well as the expenses. If the excess of income over expenditure, generally we may be getting a gross profit. Otherwise, we are getting a gross loss. Either it is in a gross profit or gross loss, it is carry forward to P&L account. It is carry forward to P&L account. Because the each and every business organization they should know, as a owner they should know how much the net profits they are getting or how much the net loss they are getting, that where they may be calculates with the help of this final accounts only. Now we should go for second one is the profit and loss account. See here, what do you mean by profit and loss account? After completion of or after preparation of trading account, we should go for preparation of the profit and loss account. In the profit and loss account, all the operating expenses and all the operating incomes that where we can record it at one place, that is called a profit and loss account. Here, all the office and administrative expenses are that where we can properly record it at one place is generally called it as, that place is called as profit and loss account. In the debit column, all the expenses are recorded at one place. At the same time, the way of depreciation that where we may calculate as a adjustment point, that is also recorded in debit side of the P&L column. And credit side is also recorded as a incomes. So those are all that where we can record it. With the preparation of all these activities, we may conclude that whether we are getting either net profit or any other we are getting net loss. See again here how we are getting net profit or net loss. Net profit is nothing but again here we are comparing, one is incomes of the total expenditures and as well as the total incomes. Here the excess of income over expenditure, generally we are getting a profit, that is called a net profit, or the whatever the expenses are more comparatively incomes, generally we are getting a net loss. So that is the reason whether we are getting net profit or net loss, that is carry forward to balance sheet, that is carry forward to balance sheet. So that is generally called as a profit and loss account. Now the final step, that is nothing but we can prepare, that is nothing but balance sheet. Here what do you mean by balance sheet? Balance sheet is nothing but generally we are prepared at the end of the accounting year. The each and every business organization, they are having both the left hand side and as well as the right hand side. The left hand side consists of the liabilities and as well as the assets. Generally in the left hand side, whatever the capital we are having, so that capital, the partners, whatever the amount they are brought into cash into the particular business organization, that should be recorded in liability side of the as a capital. If we are getting at the time of preparation of net profit, that is added into the net profit. Then if not, if we are any other getting net loss, that is deducting from the capital as a net loss. So with these adjustments, then we are identify that how much capital we are getting or having. After that we are drawings. What do you mean by drawings? Drawings are generally nothing but it is in a personal use, that where the business organization they have to use as a personal use, as a goods or so or stock or any other cash, whatever they are using as a personally, that should be deducting from the capital. Then that where we are recorded at one place is generally called as, that is the liability side of the balance sheet. And as well as the current liabilities like bills payables and as well as the creditors and as well as the outstanding expenses, these are all that where we can properly record it at one place, that is the place where we may be generally called as a liabilities. Here the assets, what are the assets? Generally assets are again categorized as fixed assets, current assets and as well as the fixed useless assets or any other like an intangible assets. These are all that where we can properly record it at one place. We generally call it as liabilities and as well as the assets of the business organization. Here the assets classifications are nothing but generally the fixed assets. What do you mean by fixed assets? First one is the land and buildings, second one is the motor vehicles, and third one is any other whatever the particular furniture we are purchases. These are all that a place where we can record it at one place. At the time of recording of these assets, all of these assets, if we can consider as a land and buildings, if the value is appreciated, so that is a way of recording in a adjustment. See, the adjustment point generally initially first time we are, if it is an appreciation, that should be recorded in P&L account credit side and as well as added into the particular land and buildings. If the asset value decreases, that should be shown into the P&L account debit column and as well as we are as a less depreciate the value whatever we are getting. So that is the net values that where we can properly record it at one place, that is called way of recording of balance sheets. And second one is the current assets. What are the current assets? Like stock or debtors or bills receivables or cash in hand or cash at bank. These are all generally call it as in a current assets, that where we can record it at one place. So with an adjustment point, that where we can properly record it at one place, those assets are generally called as current assets. And finally fixed uses assets or intangible assets are nothing but like goodwill or copyrights or patents or any other whatever the assets which are having into the business organ, that is the good name and fame of the business organ, that where we can record it in the asset side of the particular balance sheet. So when we are recording both the liabilities and as well as the assets into the balance sheet, so now we may conclude that what do you mean by balance sheet? Balance sheet is in a statement. Balance sheet is in a statement that where we can record it by using the liabilities and as well as the assets. We may estimate that whatever the financial position of your company, the particular accounting period, that particular end of the accounting period, how the financial position of the particular business organization is, that exactly shows the balance sheet. So for that reason only, the each and every business organization, they should prepare the final account. They should prepare to final account. So again I repeat, final accounts, for that reason the each and every business organization, they should prepare. First one is the steps of preparation of the final accounts. First one is the trading and second one is the P&L account and third one is the balance sheet. With this conclusion only, we may decide that whether the company is financially strong or weak or any other decision they have to take in. So end of this final account concept is completed. At the time of preparation of balance sheet, so when we are recording all these transactions like in a liabilities, by using the liabilities and assets, so that by using these two variables, the company is going to estimates what about our financial position is. So that is the reason why by estimation of their financial position, whether it is in a good or bad or any other worst cases, that they should know about with the help of these balance sheets only. If the companies may going for, or any other organization may going for, they should going for to preparation of these final accounts. To whom these are all the very, very important, means these accounts are very, very important for. First one is the outsiders, like government is also very, very important. The stakeholders or the shareholders or any other interested parties or any other business organization, they should know to conclude how the balance sheet is useful. At the time of the companies may going for, they should know about the financial position of the company. After that, they should may go for expansion of their business operations. After that, they should go for whether they have to newly constructed or newly invested for where outside the business, or that those are all that where they can properly recorded, or they should know concluded that their business organization position, that is generally called it as a balance sheet. Means by using the balance sheets only, by using the balance sheets, they should finally conclude that whether the company is good or bad. So that is the reason why in an assets column, see generally, for example, generally they should prepare with the help of this balance sheet. First one is nothing but, say for example, land and buildings. Say for example, there is a land and buildings. Here all of a sudden, is there any appreciation value? Then we may go for add of appreciation. If not, sometimes the particular assets value is also depreciate. That is called, then we may be going for depreciation of the asset value. So here the balance sheet, we should prepare the net values of the business organization, that where we can properly record it at one place, that is called land and building. If there is a furniture, say for example, furniture, see how much value. So there is a value of the furniture. Is there any depreciation? Say for example, the value should be diminishing. Then we may be identified as a net value of the organization. Then we may go for a machinery. So like that, the machinery is having certain value. When the asset value should be diminishing at the end of the particular point, then we may go for a depreciation. Then we may calculate as a net values, that where we can properly record it at one place. That is generally called it as a balance sheet. So that is the reason why balance sheet itself we can prepare, or we can identify that it is in a statement to know how much profits we are getting or how much profits we are earning. These are all that where we can record it at one place. Then if there is in a motor vehicle, say for example there is in a motor vehicles, so these motor vehicles is also is any other depreciation, then we can find out, then we can calculate the net asset value of the particular organization, we can be recorded at one place. If there is in a any other closing stock, that closing stock is also recorded into the organization. Like any other goodwill or patents or any other, these are all nothing but generally that where we can record it at one place, those are all comes under assets. Here the liabilities, under liabilities value the capital, then we may go for, is there any net profits that we can add it, is there any losses that we may be minus, that is called net loss. Is there any profit, then we may be call it as net profit. Then we may be called as the total capital, that how much we are contributed into the organization. Then we should go for a creditors, or after that the bills payables, after that any other outstanding expenses we are recorded at one place. See, with the comparison of these two only, always we are getting the equal values of the balance sheet. Why the balance sheet always equal? Means by using these assets and as well as the liabilities. Okay, at the time of the closing of the business organization, we are the repayment of liabilities by using the assets amount. That is the reason why always it may be having a equal parts of the amount can be having into the organization. So that is the reason why the each and every business organization, they should be prepares the final account. They should be prepare the final accounts. These final accounts is prepared not in a large scale industries, not in a small scale or any other medium scale. So it should be prepares the each and every business organization, one who should know how much profits they are earning or getting, or how much losses they are getting or earning into the organization. That exactly comes under the final accounts. So that is the reason why final accounts is also prepares at the end of the accounting period. Generally either it is a 31st March or any other 31st December. We should calculate the each and every business organization, that where we may be calculates into the particular organization. So that is the reason why final accounts is prepares each and every business organization, especially for they should know to how much financial position is getting into the organization. So end of this is all very very important for any business organization. Thank you.